What do you make of this recent market volatility? Is this part of a normal cycle, or does it seem, Mohammed Al-Arian has said we're in a perfect storm. That doesn't seem like a normal cycle.
Well, Stephanie, I think that volatility is normal, fits of volatility. I wrote a memo recently, and I talked about my friend Sandy, the airline pilot, who describes his job as hours of boredom punctuated by moments of terror. And that is the description of the investor's job. And
one more time, hours of boredom interrupted by moments of terror.
Exactly.
That's how you describe investor life?
Well, I think that's right. And this is one of the, the last 6 weeks in the stock market have been one of those moments of terror. But it's normal. The reasons are not quite normal. I mean, we have kind of one-off. I think that people have gotten used to dealing with normal economic cycles, recession, recovery, et cetera. But we have now kind of cosmic issues that people don't have any experience dealing with and don't know how.
What?
China, oil, rates, terrorism are just for example.
Is the fear exaggerated or punctuated by the presidential election? When you see Donald Trump up there, dare I say, putting fear
Yes.
in the U.S. economy, really speaking in such declarative statements about the disastrous situation that we're in, does that affect the markets?
I can't tell you definitively because I don't have any research on that subject, but I would guess so. They're scaring the hell out of people. And, Donald says the Chinese are killing us, the Mexicans are killing us, the Japanese are killing us, but we're going to get the jobs back. And I think that people tend to believe him. Then the others compete to be equally fearful and dramatic. They can't. It's very hard for them to compete with him by saying no. The latest information from the Commerce Department says it's not true. They don't want to hear that. His stuff is much more attention.
Headline worthy.
Howard, I'm not sure how much market volatility that contributes to, right? That's more social volatility. If you look at this chart, though, you can see, for example, the volatility in oil, 30-day volatility in oil has risen to a 7-year high, and you could argue that would have happened with or without Donald Trump's insane hairdo, right?
Well, I'm sure that's true. I doubt if he has much to do with the price of oil. I'm just talking about mood.
But this has a lot to do with the moments of terror in the equity markets.
Yes, but Matt, it drives me a little crazy because I was listening to what you said before, and you talked about the correlation.
He makes us crazy all the time, too, don't
oil prices up, stocks doing better. Why? Why?
Well, because asset classes get very tightly correlated in times of fear, right?
But oil's not an asset class. People don't have investments in oil for the most part. Who do you know who has a position in oil? I believe that higher prices for oil are bad for our economy on balance, and bad for Japan and bad for Europe, all the places that import it but don't make it. We import more than we send out. We're a net importer, but we make some. But high oil prices are not necessarily good for us. I think that the fact that stock prices go up when oil prices go up really proves that most people don't know how these things work.
Could it? Let me just ask one final question.
Wait, what do you mean by that?
Do you
Hold on.
Do you think that ETFs are maybe one of the reasons that the popularity of ETFs are one of the reasons that correlation gets stronger?
I think you're probably right because I think that ETFs for some people are a way to gamble. If most people wanted to take a position on oil in the pre-ETF days, it would have been very challenging. And today it's very easy. And they can get in and they can get out, and they have a pure play. Most other oil companies in the past had other businesses, coal or other things. And so I do think that there is a component. And all derivatives trading has basically made it easier to bet short-term speculation than it was in the past.
So Howard, I want to go back to the question of how afraid people really are. I mean, I'm looking at the VIX right now. Maybe you can pull that up. The fear index, so-called fear index of the VIX, and it's actually at 22, which I don't think historically is that terribly high. I mean, it was far higher back in November. If you go back, I mean, so it's not at its historic high. Are people that afraid, do you think?
Oh,
I mean,
well,
take it back to August.
Yeah, how about showing a 10-year chart? You're talking about day to day. I don't care about
Well,
day to day.
here's just back to March.
See the spike.
Yeah.
We actually went up to
yeah.
like 40.
But do what Howard asked. Take it
Yeah,
back
well, that
10
was
years.
China.
Take it back.
That
how
was
far?
China.
That was China.
10 years, he said.
That was the tipping point in the market. That was when the market went from incredibly complacency, obliviousness and denial, to I don't know what's going on. I better get out fast.
Right, but here's your 10-year chart. Now it's up a little bit, but I'm wondering how do you measure that fear?
This is
When you
obviously
say
a
people are
financial
fearful.
crisis.
Well, I mean, I'm not a student of the VIX, but I mean, what this shows is that you had an all-time high on this chart at the global financial crisis. You had a panic in the summer of 11 in connection with the budget follies and the downgrade of U.S. debt. And then you had a spike in the summer of 15 with China.
Right.
And now we're at a high level, but for those spikes. So I think that in general, if you look at the last year, it's higher than most of the other years.